Show you 3 ways to trade trend lines, plus my regular weekly market analysis and the trade of the week on TLRY. All right, let's talk about how to trade trend lines. They're simple, they're powerful in trading, and they're something that everyone should know. A line drawn across inflection point lows defines the upward trend line, and if you draw a line across inflection point highs, you've defined the downward trend line. When price moves quickly, it will usually reverse at the trend line. So if it's falling down toward the upward trend line, it'll typically bounce at the trend line, and the opposite can be said for a downward trend. When price runs away from the trend line, when it gets far above it or far below it, it typically will pull back to it. There's 3 ways that I like to trade trend lines: the reversals at the trend line, pullbacks to the trend line, and then breaks of the trend line. Now, as we go through the charts today in the market analysis and for the trade of the week, I'll show you how these things all come together. All right, let's take a look at the US markets, as always, starting off with the S&P 500, symbol SPY. And here you can see the short-term chart, which is a 30-day, 60-minute chart, and there is our upward trend line. Price ran away from the trend line, quite a distance above it, and so now we are working back to it, and that means we probably have another point or so of downside until we get to the upward trend line. So I expect a little bit more weakness to start next week, but as long as that upward trend line isn't broken, the bulls remain in control in the short term. Now, looking at the longer term chart, you have a very orderly upward trend, not a lot of volatility the past 2.5 months, typical for summer perhaps. So you've just got this nice orderly trend, and as long as that trend line is not broken, then you should remain a bull on the US stock market. If the trend line is broken, that point we'll need to get a little more cautious, but for now, this remains a bullish chart. Next up is the Russell 2000 chart, and in this instance, I am showing a daily chart just to give you a little something extra or different to look at rather than a weekly or a very short-term chart. There you can see the upward trend line, not really a strong trend, more of a show of optimism. In the last 6 weeks, we have been going sideways, and if you trade the small cap stocks in general, you haven't found a lot of activity the last 6 weeks or so, even really for most of the summer, because aside from that little step up in the middle of August, it's pretty much been a sideways market. However, it is an optimistic market, and eventually we should break out of this range, which is looking like something like a pennant right now. So if we get an upside breakout, then it will be time to get a little more active on those small caps, and that typically will happen October, maybe November, but it should happen relatively soon. All right, on to the Canadian markets, which have really lagged the US markets, and when we look at a chart of the TSX, you can see that in the short term, we've had a little bit of an upward move. The currency in Canada has done a little better, and I'll show you that as well. In terms of the trend line, there is your downward trend line, and that was broken this week. Now, what I want everyone to notice is that price had ran away from the trend line to the downside. It came back to it, it stalled briefly, and then it broke it. And so that is a good signal in the short term that this market wants to work its way perhaps up into this level here, which is short-term resistance. However, in the long-term context of this market, we are still stuck in a sideways range with resistance right there. So my expectation is, as the market starts to speculate that Canada will get some sort of deal with the US on NAFTA, and Mexico, of course, that a lot of the things that have been holding back the Canadian market will go away. And that should bring the market back up to resistance in anticipation of something like that happening. And if it does happen, and if it's relatively favorable, then we should get a breakout. If something goes wrong, then you can expect that you will see more weakness, and perhaps this upward bias on that rising bottoms there might get broken. We're not there yet, but that'll be, I guess, what we should expect if something doesn't happen on NAFTA. Moving along to the TSX Venture, which is of course the microcap stocks in Canada, you can see that we are in a downward trend, but that has just about been broken with a rising bottom. So this is a classic reversal setup. You've got the downward trend, you break it, you build a rising bottom. Now what we need is the upside breakout. Now I said it earlier with the Russell 2000, those small cap stocks usually do well October-ish until May-ish. And so we're starting to see that building with some optimism. We just need the breakout through resistance. Maybe that's a few weeks away, but something to keep an eye on. On to the currency market. Let's take a look first at the US dollar. And I've got the longer term weekly chart here. You can see the upward trend line, I would say, has been broken. We haven't had a strong breakdown through this support yet, but we've seen the US dollar weakening over the last 4, 5, 6 weeks. And I think if we get a breakdown through this old resistance, which has now become support, it held this week. But if we get a breakdown through that, then I would get a little bit pessimistic and careful with US dollar assets, because we could see some of that value start to go away. Looking at the Canadian dollar, it benefited a little bit from the US dollar softening, and I think the market speculating that something is going to happen on NAFTA. But there's your trend line, inflection point, inflection point, inflection point, and we have now come back up to that downward trend line. I expect very short term, let's say next week, that the Canadian dollar will stall there. But the big question is, does it stall for a week or two and then finally break through? If so, then the Canadian dollar should start to move back toward these local highs in the 81 range on the ETF. Interest rates, always like to look at the TLT ETF, which represents 20-year treasuries. And you can see that we've been moving lower the last 4 weeks. And this has gotten a little bit of press because the yield on these bonds has gone above 3. And we're now back to very important support that is held up for a long time. You can see it once, twice, 3, 4, and we've held it again since we fell into this support zone and didn't go sideways at the support zone and then break down, but we've fallen into it. It's likely that we will see a bounce back in the bond market next week, and perhaps 3, 4 weeks down the road we break through support. But for now, I expect that we will hold that support in the short term, bounce back a little bit, perhaps moving interest rates back below 3%. Onto the commodity market, I'd like to look at gold and oil. Let's start with gold, and this week I am showing you the daily chart. The weekly chart is still in a long-term downward trend, but I wanted to show this just to drive home the trend line again. You can see that we ran away from the trend line. We've come back up to it. We're stalling there, but we are building a rising bottom. What that means is that if we build that rising bottom and then break to the upside, we should actually see an upward move for gold. Hasn't happened yet. Don't get too optimistic about gold. I've been a bear for a long time. I don't want anyone to think I'm bullish yet. However, the fact that we are consolidating at a rising bottom right at the trend line, the downward trend line, could resolve with an upside breakout of that trend, and we could see a little rally in gold. The critical thing is we have to see that break of trend, something to watch for next week. And on to the oil chart. We had a little bit of strength the last week or so, a little bit of a rally there, but now coming into resistance from July, and that is where I expect the market will stall. We basically have a little head and shoulders bottom pattern here, and if we can break through that horizontal trend line or line of resistance to the upside break, then we should move higher on oil. I don't think it'll happen next week because typically you stall there for a few days at least and then break out. But again, something to keep an eye on, especially if that US dollar does get weak. You'll see the Canadian dollar get stronger, and commodities, which are priced in US dollars, will benefit and probably move higher as well. So my outlook then, US stocks bullish on both time frames, Canadian stocks neutral long-term, bearish short-term. We could switch to at least neutral and perhaps even bullish short-term very quickly if we can break that downward trend. Gold, I remain bearish long-term, neutral short-term, but that could upgrade to a bullish outlook short-term and perhaps neutral longer-term if we do break that downward trend line on the daily. Oil, bullish long-term, neutral short-term, simply because we've rallied into short-term resistance where I expect the market will get stuck. The upward trend in US stocks continues, so remain bullish until the upward trend lines are broken. Canadian stocks are lagging but starting to show stability, perhaps looking toward a resolution of the NAFTA issue. Gold is stable, but it's still in that long-term downward trend. So until that trend is broken, don't get too excited, but watch it carefully. Oil has recent strength, but it is now hitting resistance. All right, let's look at the trade of the week. And again, just to emphasize some of these concepts with trend lines. And this isn't a trade that I did particularly. I just want to emphasize how you can use trend lines to know when to sell, when to buy. So here we have a chart of TLRY, which is far and away the hottest stock of the last probably year, has moved considerably in the cannabis space, of course. The first thing I want to highlight is the linear trend line, which is right there. And notice when price runs away from the linear trend line, it pulls back, and those are the opportunities to buy it. It runs away, it pulls back, you buy it when it gets back to the trend line. That's one of the ways you can trade trends. Another thing that has happened is the trend went parabolic. When trends go from being linear to being a curve, a parabolic trend, that means that investors are getting very emotional. And when those parabolic trends get broken, what you want to watch for is a break of that trend as a cue to sell or even to go short. So here you have the parabolic trend. It was broken on Thursday, I think, or Wednesday afternoon. I think Wednesday at the close, just before the close there in the final hour. That upward trend was broken at, let's call it 225-ish. And look at what's happened since then. It's fallen to 120, so almost cut in half with that break of the upward trend line. In this case, a parabolic trend. Sometimes trends won't get parabolic. In fact, now we have pulled back to the linear trend line where the price should hold. We should bounce off of that. The 120 zone should be support next week, and we can bounce off of that. If, however, we break down through that trend line, well, then we're going to start testing other levels of support as the air comes out of this bubble. Well, that has been the Stock Scores Market Minutes for September 24th, 2018. I hope that you have a great week in the market. Make sure that you click on that like button, subscribe to the channel, hit that little alarm button. You'll get email updates when I upload a new video, and I've got a bunch of new videos coming. But most importantly, trade well.